What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why Tesla and the overall market did have a bit of a pullback today, despite the fact that we did have quadruple witching. I'm going to break down why that ended up happening and how this may affect Tesla's share price for the future. I'm also going to talk about what the news, data, and technicals are telling us and what's going on with the shorts on Tesla. Are they shorting more Tesla right now, and how could this affect Tesla's share price? Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and any could be a free Tesla share. It's a limited time offer. The offer ends in just 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So anyways, Tesla's down 2.17% for the day, and this is actually kind of ironic because I thought Tesla would actually get a nice push up and actually fill this gap. It came just short, stopping at 186. My target on Tesla was 187 to 190. Once again, we came just a little bit short, and then Tesla and the market ended up actually pulling back instead. So I want to break down what actually happened for today. Now, in my previous video, I told you all that there's a good chance that the market could actually see a squeeze. And I wasn't necessarily wrong about the possibility, but the shorts ended up having a very different idea. But when I realized this, and when I saw the market just like starting to pull back and show lots of signs of weakness in the price action, very early in the morning, just a few minutes after the market opened, maybe like 15 minutes in, I released this video and I showed you guys some bearish signals on Tesla, and I warned everyone right after. And I really hope that most of you saw that. I really want the best for everyone in the process. But going forward, I want to break down what happened to the market. Why did the market end up pulling back instead? What happened was we had quadruple witching, lots of options expirations. We had a 2.06 put to call ratio. This actually went down yesterday. It was actually 1.86. It went down because a lot of puts were closed, causing lots of market makers and institutions to hedge, which led to more buying pressure. As the buying pressure came, we saw the market rally really hard. We had a very bullish candle on SPY, at least in the very beginning. And what happened was the market makers wanted to pump the markets. They were trying to pump the markets all the way up to about 400. That's what they wanted to do from yesterday. Why? Because they wanted to absolutely destroy shorts. That was their plan essentially. And they were successful yesterday at starting to push the markets up. They were getting very close to giving us a very good position for the market to pump even more. But the shorts realized this. The shorts saw all of this coming, and that's why the shorts ended up actually doubling down and shorting even harder. So the put to call ratio is 1.8 something. Now it's about 2.06. Max Pain also went up because of that. And the shorts saw what the market makers were doing. They worked very hard to push the market down to make sure they don't get squeezed or destroyed. And they managed to get 761,000 puts in the money. Now, even though this was the unlikely thing, the market makers tried their best to pump the markets. You could see in the very beginning of the day, they were trying. They wanted the markets to pump, and they ended up failing. So sometimes, unexpected things could happen, and the market makers are not invincible. There are times where they could lose to other institutions, and the whole day today was basically a battle between market makers and institutions against other massive institutions and big bears. So right here in the beginning, we had this gap down on SPY, and the market actually tried to rebound. They were trying, the market makers tried. Then the bears came in and they started shorting very hard. They started attacking, and the algos turned very bearish once SPY broke below, I think 393 or somewhere around there. And then as we came down, our key support zone was 388.56. So that's where a lot of buying pressure came. The market makers fought. They brought this thing up to like 392. They were trying to hold us above 390. They were trying to once again squeeze shorts and fight, and it just went back and back and forth for almost the entire day. It was just a fight between the big dogs, and we were basically like the people on this side watching this happen, a real life fight between them. And what happened was, at least at the time I'm watching this, the reported close was 389.99, just under 390. That's what the shorts wanted, to get as many of these puts in the money as they could. And they ended up coming out on top. Now, when it comes to next week, what on earth is going to happen? In my opinion, we have a very, very, very important FOMC meeting. Jerome Powell is going to be speaking and talking to us about the next rate hike on Wednesday. Wednesday is going to be one of the biggest days of the year because the Fed is going to determine if the market's about to crash or if the market's going to see a rally. And I say this because if the Fed pauses, the Fed could pause, even though I would say it's unlikely, not the best of moves, but it is technically a possibility if the Fed pauses on rate hikes. They could try to do that to help alleviate the pain in the economy and to try to help out their banks. That's what the Fed might be thinking. But the problem is inflation is still very high. The last report year over year was up over 6%, but PPI did cool off a bit. So now, inflation, the reading was kind of mixed, but it still is very high and well above the Fed's target. So Powell was saying the Fed is going to keep hiking as long as inflation is hot. So the Fed still most likely has to hike anyways. If the Fed gives us 25 basis points, which I believe they most likely will, the market could still pull back a bit. Powell is also going to be addressing the situation involving the banks, which will affect the markets and the entire finance sector. But if the Fed does the same thing that the ECB ended up doing, and they give us 50 basis points, the market is going to crash. We're going to get a huge crash if that ends up happening. It's a possibility, but it seems very unlikely. Powell is not known for making moves like that. But I just want you all to know that if they make that move, you have to be prepared just in case. The FOMC meeting is going to be on Wednesday of next week, March 22nd. When it comes to Tesla, I want to break down other pieces of news. But one last thing before that, First Republic shares are down like 33% after another deposit infusion, dragging down other regional banks. They come even after the fact that 11 other banks pledged to deposit $30 billion in First Republic, or at least for at least 120 days. So there's so many banks trying to rescue the others. There are so many banks also struggling. And this whole situation is increasing the odds of a potential bank run, and contagion or something like that, which is leading to stress in the financial and credit markets. Now, the banks are in a very, very tough place right now because with inflation soaring, we need to see higher unemployment. If the Fed does not raise rates again and they pause, there's a risk of inflation going up again. And that's going to make it even worse because they're going to have to be even more aggressive later on if that ends up happening. And if that happens, it's going to make everything worse for the banks. So the banks out there that own all these bonds, these mortgage-backed securities, they're struggling. That's why they're trying to raise their rates right now. They're trying to give people better returns if they deposit money into the banks because they're trying to incentivize people to buy and deposit money in banks. They don't want people to withdraw their money because they're desperate. This is a sign of desperation from the banks, which tells me we're not in the best of situations. Can I say with 100% certainty that the banks are all about to collapse? Well, there are a lot of signs suggesting that that's most likely going to happen or something similar where a lot of banks are struggling and more start to collapse, which is going to hurt millions of Americans and the entire finance sector, leading to a potential major, crash in the stock market. It's very possible. There are many signals pointing in that direction. I want everyone to be prepared just in case. Now, I can't say it with 100% certainty, of course, but it's very likely that this is just going to get worse. When it comes to Tesla, however, Tesla makes me very confident in the future because Tesla is still working very hard to improve their fundamentals. Tesla has applied to expand their Giga Berlin to 1 million vehicles per year. This is once again very bullish, very, very bullish news in my opinion. we could see they submitted an environmental application to expand their production, and this in turn is going to lead to more and more bullish outcomes for the company. Tesla's working very hard to meet their goals, and I believe that with these expansion plans, they're most likely going to get close to them, even maybe even beat them. And the bottom line is, when you set your goals high, I can't promise you that you'll meet all your goals, but you'll get much closer and much more successful if you aim for the stars. Now, when it comes to Tesla, another big thing that came out is the fact that Tesla is releasing a new mobile app with better insights on how your battery packs are performing. So, this is once again a very, very awesome update by Tesla. They're constantly working very, very hard to improve their company, to improve their displays for individuals, and will actually display a portion of the battery that is unavailable due to the battery pack's cold temperature. So, very, very cool updates right over here. They're also going to give us new tick marks. They're displaying at 10% intervals. They're now showing how the batteries are performing, how well they actually are, and how much power they actually have in them. This is once again another great, great, great innovation from Tesla. And I just see more things like this continuing to emerge. They're once again continuing to update us. When it comes to Tesla's technicals, we dropped 2.19% with volume at 132 million. We're not necessarily crashing on high volumes. We didn't see a crazy amount of selling on Tesla. This was actually not that bad overall, but we have to be very careful because I believe Tesla is still in a topping process. It didn't really reach my peak target, and it is possible for us to try to get back there next week, but I'm not counting on it running way too much. The short volume is actually starting to uptick a bit compared to this point from before. It used to be at 43%. Now it's actually at about, this is like 50%, almost 50%. So we're starting to see more short volume making the majority of Tesla's overall volume. Now, when it comes to shorting, we saw about 19 million Tesla shares shorted just 2 days ago. We are starting to see more shorts piling in. And overall, I believe this is important to note because they could be getting ready for a big opportunity. Now, there were moments where Tesla had a lot more shorts during periods like this, and as Tesla started running to the upside, we saw this overall shorting go down for quite a while during this period, but now it's starting to uptick a bit. We have an uptrend right here, and this in turn could lead to a weakened performance for Tesla. Tesla's overall short interest is about 34 million shares. That's how many shares of Tesla have been shorted overall for the overall short interest. It's only 3% right now. But as this increases, this also increases the odds of a short squeeze if we get the bullish news in the future, or maybe going into like the much longer term future. But for the medium term, as I told you guys before, the odds are in favor of the bears right now. They are favoring the bears. I can't say this with 100% certainty, however, for the next like week, because it also depends on the FOMC meeting. But if we just ignore the FOMC meeting from the technicals, we are actually a little bit more in favor of bears. I'm saying this because of the fact that we are about to get the PPO crossover in the MACD from SPY, and SPY is declining a bit. We do look like we're holding 388 well, so I don't know if we're going to get like one last pump to fill this gap, pump up a little bit more, but any pump is not going to be too massive in my opinion. I do believe that, once again, we're excluding FOMC from the picture. If the market does try to rebound a bit, it's likely not going to be too massive, and we are most likely going to see even more downside going forward. I also want to note that from a technical standpoint, I'm not really seeing any divergences from the RSI or MACD, but on Tesla, we do technically have a divergence. On the hourly time frame, you could see the price made a higher low. This was actually from today. The low from before was 176 and the new low was 177. But the RSI went to a lower low, which actually forms a hidden bullish divergence. This means that Tesla had the potential to start to rebound, and we ended up bouncing off 177 going all the way up to about 180. Now, I don't know if that's all there is to it because the signals are very mixed right now. The RSI is telling us that Tesla might try to bounce a little more. I don't know how much more it's going to bounce, whether we try to fill this gap or not. I don't truly know as of right now. I will give you guys more insights about this by Sunday, but for the time being, it's a little tricky to tell. But the MACD is looking more bearish because we are seeing this gap just widen between the PPO and the signal line. And we're also starting to see more bearish momentum developing. It really struggled to fill this gap, and we are seeing more resistance as it comes up here. Also, the overall shorting on Tesla is starting to uptick just a bit. If Tesla does start to pop more, I would expect more shorts to be getting ready. And I do believe that for the medium term, and once again, we're ignoring the FOMC meeting when I say this, but for the medium term, the odds are essentially favoring Tesla becoming more distributive and eventually coming down to fill this gap way down here in the 140s. I'm not saying it has to happen immediately. It may take, many weeks, another month or so, but the odds are favoring that we're most likely in a topping process for Tesla between the 180s. Could we get to 190? I mean, it's possible. It really depends on FOMC and the news, but the odds are favoring that we're still like in a topping process. There's not like a whole ton of upside left. And we're likely going to see Tesla start to actually downtrend and come all the way down here to fill this gap into the 140s. Now, before that happens, it is possible for us to try to get a rebound because that is what the RSI is telling us for Monday, maybe. I'm going to wait for any news over the weekend and also, the banking situation before promising that or confirming it or anything like that. But another thing that's a little bit bullish is the VIX. The VIX is suggesting bullish price action for the market. The VIX was up over 10%. When the VIX is up over 10%, that tends to mean that the day after will likely be the opposite, and we are going to see the VIX cool off a bit. That's what tends to happen. I'm not guaranteeing it, but it is a real possibility. So there's maybe like a 55% chance the market's going to try to rebound a little bit going into Monday. And there's maybe a 45% chance we see more downside as of right now at the time I'm recording this. However, I'm not really counting on too many like really, really awesome like day trades or crazy big swings. I'm not really counting too much on it because I believe that yes, we could get some small rebounds here and there, but it's not going to be anything too massive because we have FOMC this week. And I think the market's going to be more sideways and kind of choppy as we approach the big dates because we're very indecisive right now. We don't know if Powell is going to smack the markets down and cause a massive crash. We don't know if Powell is going to actually lead the markets to rebounding. We don't truly know, right? Anything can happen. But the best thing to do is just be very cautious and be very patient and do what's best for your own self by being prepared and being ready for what Powell has to do. Remember, if the Fed ends up pausing, the stock market is going to most likely rally. Most likely. Out of euphoria, out of hype, out of whatever it is that drives the market, the sentiment, the excitement. However, if the Fed gives us 25 basis points, the market will most likely maybe cool off even more. That's also going to depend on Powell's language. What is Powell saying? What is he saying about the banks? Is he going to cause like fear? Is he not going to do it? We'll just have to wait and see. Finally, if they give us 50 basis points, which is extremely unlikely in my opinion, but it is a possibility, the entire market is going to crash. Tesla's going to crash hard, so is SPY, so is QQQ, if the Fed is way too hawkish. So please be ready. I also want to note once again that if Tesla gets a rebound, this will once again be a short entry for lots of shorts. I think lots of shorts are waiting to start entering in these higher zones. Maybe they already entered like around here and they're just getting ready for this thing to start pulling back. I don't truly know. For the short term, a rebound is possible. It is still possible. It is possible Tesla's going to try to hold up as we approach FOMC, not crash way too much. But for the medium term, regardless of FOMC, the odds are favoring more downside coming. Right? Tesla eventually, finding its way down over the next couple of weeks, next couple of months or so, all the way down to the mid 100s or even lower than that, unfortunately. All right, so I will give you guys more in-depth updates about the price action of Tesla and like my prediction and stuff for Sunday. But for the time being, I'm just going to end on this note and give you guys what's best as of right now. The market is quite indecisive. We're just waiting for lots of big data. So be ready for more chop and sideways action for next week. And with that out of the way, thank you all so much for listening. Please enjoy the weekend. Tesla to the moon because the long-term future is still incredibly bright. And peace out.